You're listening to the Big Cast, your source for the latest in financial technology. Brought to you weekly by the Best Innovation Group, with your hosts, John Best and Glenn Sarvati.
Welcome to another edition of the Big Cast. My name is Glenn Sarvati on behalf of the Best Innovation Group, where we like to do cool things with financial technology. And we are just back from the Venture Tech Conference outside Dallas in Frisco, Texas, and the kind of wrapping up a long conference season. And I'm not sure I want to say that we saved the best for last, but man, what a great conference. I'd be hard pressed to think of a better venue for those who are focused specifically on credit union innovation. I got so much out of these, pretty much 2 days of content spread over 3 days on the calendar. We'll have a couple of different episodes kind of keeping going on this topic and doing the recap of the event. But we've got two interviews this week. The winner of the launch party competition, Saeed Kian from Ribbon, and then also somebody we've spoken to in the past, Alex Matjanik from Wish. So that'll be coming up in just a few seconds. As always, I want to just remind you can find out more about the Best Innovation Group by checking out our website, big-fintech.com, about all the products and services that we offer from there. Also want to remind you that if you're listening to this right as we post it, you have an opportunity to join us live on Wednesday afternoon, November 20th for the Credit Union Town Hall. That takes place at 3 p.m. Eastern Time, noon Pacific. And this week, I think we've got a topic that'll be of great interest to a lot of people. We're going to be John Best and I, and hopefully a lot of participation from the audience as well. We will be digging into the impacts that can be expected on the credit union space as a result of the election outcomes of the last few weeks, and the way that the regulatory authorities and other kind of appointments are shaping up so far. Important stuff, interesting stuff, and actually feeds off of some of the conversations we've had at conferences over the last couple of weeks. As you'll hear, several of the regulators have been on stage, both at Venture Tech and at Money 2020 a couple of weeks before that. cutownhall.com is where you can find out more about that. It is free to attend. We invite you to attend and also to bring your thought process and your thinking caps and not leave the mute button on, because we love to have that to be an interactive conversation. You do need to register in advance, but as I say, there is no fee for attending. So, on to Venture Tech. 25 presentations over the course of the 3 days, actually broken up into two separate events. There was something called the launch party for the earlier stage fintechs. There were 10 of those, and then 15 companies in the main competition. Pretty remarkable to me that of 25 companies at this stage of the cycle, given how many different events, Finovate, Money 2020, etc., and I've got to say, I stay pretty close to this stuff. I was amazed that the Venture Tech folks managed to pull together a group. I had only seen 5 of these companies up on stage before. I knew of a few of the others, but I'd never actually seen the 20 of the 25 present. And of the 5 that I knew, 2 of them had significant new developments to report on as well. So it was really a fresh view. Also impressive, the 2 founding sponsors and still kind of the coordinators and organizers of the conference, the Circle Fund, who we've spoken to before, and CUNA Strategic Services, as also somebody who's been on the podcast before. They both obviously have a play in this space. So you think, okay, is this going to become an opportunity for them to promote the companies in their portfolios? Well, look a little bit closer, and unless I'm missing something, I can see only 3 of these 25 companies in those 2 firms' respective portfolios. So obviously, they spend a lot of time pounding the pavement to see what the best and brightest is upcoming in the space. And I'm sure that based on reception at something like this, where they get to road test in front of a credit union audience, these types of companies, they may become members of their portfolios. But great opportunity to dig in. And I've got to say, it was a deep, deep roster. When you got to the competition and time for audience votes, it was pretty tough to really differentiate in some cases who really came out on top. I mean, I literally had a hard time of the 10 of the launch parties. I would have happily voted for about 8, and I'd say probably roughly around the same ratio around the main competition as well. And it wasn't just those types of dog and ponies, and it was a little bit longer than usual too, about a 10-minute 10-minute presentation, and the opportunity for audience Q&A, which is a little bit unusual. Usually there's not an open mic section that comes in, and some great conversation and feedback based on the way the credit unions are thinking about these solutions. But on top of all that, we had some great guests that provide perspectives, particularly from the regulatory and public sector space. Kyle Hauptman was there from the NCUA, and kind of breaking news with the changeover in administrations, he will now become the incoming NCUA chairperson when the handover of power takes place in the January timeframe. He's already obviously been a board member, but now, given the composition of the board, he will wind up as the chairman. Rodney Hood was also there. He was the former NCUA chair and is now a board member on a few of these companies that we were looking at, and also others in the portfolio for Circle, et cetera, had some great perspectives to share. And Charles Weiss, who is the director of the NCUA Office of FinTech and Access, which is a separate initiative that was actually launched by Chairman Hood during his days at the top of the NCUA. Charles Weiss had some great thoughts. He is a former head of the Kentucky Department of Financial Institutions, also goes back to the FDIC. And I'm realizing now there's so much more to say about this stuff that we just don't have time. I think I'll just kind of get my pen out and write a blog on this one. So you'll probably be seeing a little bit more if you want to hear a few more insights about what came out from these conversations. But let's get on with the launch party winner. Company, and there were 10 companies. As I say, it was a deep field, but one of them kind of pulled away with regard to the audience vote at the end of it. Saeed Kian from a company called Ribbon. And I think after you hear this conversation, you'll understand why I was so impressed with them. I'm here with Saeed Kian, who is the co-founder and the CEO of Ribbon, which is the company that won the launch party for the younger up-and-coming fintechs on the first day of Venture Tech that we just attended this last week. Saeed, congratulations. I think you did a great presentation.
Thank you so much. We're really excited and obviously honored by the recognition.
So if you could just give a quick capsule description of Ribbon's mission. I mean, I kind of jotted down, you could look at it as deposit retention, member engagement, all of the above. I'll let you kind of say how you couch it.
Yeah, we want to enable credit unions to be able to participate in the great wealth transfer. So what we're trying to do from a mission standpoint is enable credit unions to serve grieving families by providing them with an inheritance platform. And the idea is that that inheritance platform should, on one hand, make it easy for members or non-members alike to be able to have a self-serve model for submitting documentation related to their inheritance, whether it's a death certificate or certificate of trust or any other document related to an inheritance or passing. And on the other hand, enable the credit union to be able to have all that information in one place, have that documentation verified using our AI, using our machine learning, and at the same time be able to enable credit unions to run campaigns to be able to try to retain more of that next generation of wealth with them.
Now, what brought you to this problem? If you're looking for a problem to solve, was it personal experience, or how did you come at this as a significant pain point?
Yeah, unfortunately, it was personal experience. 3.5 years ago, I lost my dad to pancreatic cancer. So I was, at the time, I was living abroad with my wife. COVID had hit when he was first diagnosed, and he gave us a call. He told us that stomach pain that he was having wasn't just stomach pain, that unfortunately doctors came back and said it was stage 4 pancreatic cancer. And he didn't have a lot of time, and then it had spread. And my wife and I were obviously, not expecting a call like that. Just thought it was going to be a regular call with my dad, and unfortunately it wasn't. And we decided to move back home on the East Coast, where I'm originally from Virginia. And we moved in with him. We took him to chemo, took him to radiation. I did have last father-son trips. And did also the logistics, right? I mean, he went through hospice, and while he was in hospice, he was helping us, tell us where his accounts are. He added me as a beneficiary. And, honestly, everyone told us we did all the right things. And looking back on it, we did do all the right things. We made sure everything was tidy and set up. And in a lot of ways, it was a blessing because, we had time to prepare.
And time to spend with him.
And time to spend with him, right? So from my standpoint, I get last father-son trips. I get time with him. We have all the conversations that you hope you can have with your loved one before they leave, right? Have say all the things that you've been holding back or maybe too proud to say, or, all those conversations that I just find to be really important. We're having those conversations. and he goes through hospice and he passes away. And a lot of ways, I was expecting the grieving, and I was expecting the next few months to be about that grieving process and just to kind of like understand and almost digest what had happened. And then literally, I would say within almost 24 hours, I realized that that was very naive. Actually, that there was an enormous amount of logistics work to do, that there was an enormous gravitational pull to do a lot of things related to an affair. And I was really taken by surprise by that, right? I mean, I wasn't surprised that he passed away. He went through hospice. That of course we knew that. But I was very surprised at how complicated it was. And particularly the thing that struck me the most was going to financial institutions. In this case, my dad has money, like many folks, across a few different institutions, including one credit union. And
so you're doing this
realized,
multiple times too.
And I'm doing this multiple times. Exactly. And I'm going through to multiple institutions. And to your point, multiple times, I keep having to go in person for the most straightforward case, right? The case that everyone says is the easiest and best case scenario. Your beneficiary, you listed. Everyone always tells you the same thing. Don't worry. It's just, I just give a death certificate, it's taken care of. And here I am still doing second, third visits, fourth visits because I forgot a form, or like,
the last thing you want to be doing too.
Last thing you want to do. And, you have a full-time job, you have other things, you have a funeral, you have other things that you want to, you have to be doing. And at some point I realized, this is literally when I'm getting my check, my inheritance check. I'm not a wealthy person, but I was inheriting a little bit more than the average deposits at that institution. And I was taking that check and I was walking out the door, and I just remember thinking, this is so weird. This is a complete lose-lose. Everyone in this situation just lost out. I just spent, in this particular case for this check, 4 visits over 4 weeks. They just had someone on my case who was literally calling and taking up the phone lines and working on my case in the back end. They had someone who must have spent many, many hours on my case. And then I just walked out with the deposits.
Keyword, like walking out the door with the check.
Literally walking out literally walking out the door. And all I can remember thinking, I was like, everyone was worse off. Everyone's worse off. So that's the idea for Ribbon came in, was there's got to be a way to make this a win-win. There has to be a way to make this so the person who's grieving has a better scenario, but also the credit union has a better scenario because they can offer a great experience, they can save time on the back end, and they can hopefully retain more of those deposits.
And you mentioned that if you can walk through your kind of the modeling, the assumption that goes behind this. You said a typical, let's say, $1 billion credit union, take a nice round number, it probably experiences 1,300 member deaths a year. Is that the number
It's so,
you came up with?
yeah, we always try to bring this to life because, we always want anyone who is, part of a credit union to take a step back, say, okay, you have a certain amount of AUM, right? Your total deposit balance, the amount of money you have for your institution. So let's say $1 billion in this case. You have a certain number of members. So let's just say it's 100,000 members, right? 100,000 members, $1 billion AUM. Most credit unions have an average age of somewhere between 53 to 56 years old, right? So just say 54 years old. If you look at the actuary tables, and you say, well, what percentage of my members do I expect to pass away? It's going to be somewhere between 0.8 to 2% of members that I expect to pass away, depending on a bunch of variables. And we have models that we do for this. So you say 100,000 members that you have, you would expect probably to lose somewhere between 12 to 1,300 members for your average credit union in most areas of the country. Wow. And you'd expect to have 1,300 members pass away. And let's just make it even easier. Let's just say it's 1,000 members pass away. That is 1,000 cases per year that you're going to have to work on all of those tickets that are open, take the death certificates, work on the IRAs that have their own special processes, et cetera.
Workload at the same time as deposits at risk.
Exactly. And at this current state where we are with credit unions in the industry at large, is that those deposits, unless you already have a joint account balance, unless you already have a really deep relationship with that next generation, will walk out the door. They just will.
So the product that you actually have for that, it's actually something that is designed for the heir or for the member services representative. How does Ribbon fit into the mix?
Yeah, we try to be the connector. So in some ways it's both. We have to service both. And the idea is you plug us into your website, and we also provide a link for call centers and that MSR or anyone in branch. And it all allows for that inheritor, that next of kin, that person who's grieving, or a third party who's representing the person who's grieving, to go through a flow to collect upload a death certificate, to provide a certificate of trust if required, and an LOA, for example, if required, and make it really easy for them to have that self-serve option so they can provide that documentation online. And one of the reasons that's important is because most folks who are going through this process are not just full-time working, but they're also parents. So they don't have the ability to go and branch. They don't have the ability to just take 45 minutes out of a day on a phone call. So you want to give them that option to be able to self-serve. And at the same time, where is that documentation going? Well, it's going on the back end to our admin portal, which provides not just the verification of documents, where we use AI and machine learning to verify that documentation, so you know it's authentic, it's real, and it's relevant, but we're also allowing them to be able to see all the things that is required to freeze an account, close an account, move the money over, make sure that next of kin is there, and also do things like thoughtful things, like things we call condolences, send flowers, send notes, be able to provide that extra touch.
Now, you mentioned before this was actually not your first venture tech that you attended per se.
That's right.
So if you can, yeah, I guess at one point your original thought was this might be a direct-to-consumer model. Can you kind of say a bit about the fact that about what happened about a year ago?
Yeah, it's a kind of a funny story. So it was about a year and 3 months ago was when it actually started the company, right? We got our C Corp up, and we, imagine young entrepreneur wants to get up there. And the initial thinking was, I just went through this process. I wish I had someone to help me go through it. And so direct to consumer, right? If you're grieving, come to Ribbon. Ribbon will help you with going, working with those financial institutions. We can help you go to that credit union and help out. Well, really quickly, we started to come up with more and more data, both from my experience and then also from other experiences in our research, were showing, well, actually, a lot of the problem is that the credit union itself is not enabled, right? They're not enabled and empowered to be able to service those folks who are grieving. So we started having this idea, hypothetically, that, okay, well, what if credit unions would want to take our software and make it easier? Like, maybe there's a business case there. Maybe we can show that it saves them time. Maybe we can show it improves experience. Maybe we can show that deposit retention will increase. And venture tech was coming around the corner. This is a year ago exactly. I wasn't, venture tech is pretty strict about who they allow to attend. That's not a credit union. They don't want just every fintech to show up, because then it would just be a million fintechs compared to 75 to 100 credit unions. And I was like, well, I still want to find a way to validate this idea. So I figured out venture tech, where they were going. We weren't allowed to go upstairs. So we just stood in the lobby, and I would just try to ask anyone who would give me 30 seconds of time. I was like, if you'll give me 30 seconds of your time, I'm so sorry. I just need to validate this idea. And they have no idea who I am. They have no idea why I'm interested in this. They have no idea that the reason I'm so passionate is because I lost my dad. So they don't know. They just see someone as like, probably trying to sell me something, when in reality, I just wanted to verify it. And it was literally 1 year ago exactly. We tried to talk to a lot of folks. We got 2 conversations, and of those 2 conversations, 2 out of 2 were like, oh, we would definitely be interested in talking more. You should really consider fleshing this out more. And then because of that, we invested time into it. And because of that time invested, we realized, oh, there's something really powerful here. So it was literally 1 year ago, I would consider the actual Ribbon itself to what it is now started.
And then fast forward, there you are on stage, and you're picking up, what was it, over about a third of the overall votes, and finishing first in best of show in the launch party out of 10 companies. That's amazing. And you mentioned that you're about to go into pilot with your first couple credit unions, right?
That's right. Our first 2 credit unions will be going live in the next few weeks. We're really excited. We have a few others we hope to get up, if not by end of year, then in an early Q1. So we feel like we have strong momentum. We feel like we've validated that this is a problem and a need. And we feel like once credit unions get over that awareness gap of, oh, this is actually a problem, that this isn't just a one-off, this is a huge business opportunity, we feel like that is leading to something really powerful. And we're excited to have our first 2 credit unions go live, hopefully soon. Great.
I'm sure there's people, obviously you struck a chord with the folks in the audience. Anybody who wants to find out more, best way to do that?
Go to trustribbon.com, www.trustribbon.com. Set up a demo if you want to hear more. You can also reach out to me on LinkedIn or on Twitter/X at Saeed Kian. You can also just DM me on LinkedIn or Twitter /X, and I'm happy to respond.
Wonderful. CEO, co-founder Saeed Kian of Ribbon. Thanks so much for taking the time.
Thank you so much for having me. Really appreciate it.
So one of the things we talk about a lot in the credit union space is humility. And I think that very, very impressive. This is, the more I dug into Saeed's background, the more I was like, wow, this is something. What we really didn't talk about much here is that Saeed's background includes time with Stripe, Meta, the World Bank, and very specifically, we started talking about how he worked in Myanmar, because he talked about being overseas, I believe in Singapore at the time, when he got word of his father's diagnosis. But he also spent time in Myanmar working on the rollout of their mobile money infrastructure with a company called Wave Money. Interesting stuff, and like I say, very impressive guy. Check out Ribbon. We got the link to that company in the show notes, and you may want to check him out on LinkedIn as well, just to see all the things he's been doing along with that. A little bit onto the main competition now. The 15 companies, as I said, Ribbon won the launch party for the early stage fintechs. The 15 companies in the main competition were broken up into 3 pods of 5. And then after each of those, there was a vote to see who won each of those individual brackets. Then those 3 actually faced off against each other. We've spoken to Wish before and Alex Matjanek. Interesting solution around micro life insurance to help as a deposit retention tool. They made some interesting progress since the last time. They were not one of the winners of one of these pods, but they were, like I said, the competition was fierce. They were a very close second in one of those, and frankly, they were the one that got my vote in that pod. So with that in mind, let's jump in and hear what's going on with Wish. Here with Alex Matjanek, CEO and founder of Wish. Alex, we spoke last year at Finovate when you won Best of Show, and that was the first time that I had a chance to see your product, and you guys have made some nice progress.
We definitely have. We're really excited to be here. It was a big raising event at Venture Tech and being able to expose us to credit unions, and really proud of our progress.
Now, the first time we spoke, I guess it was fall of 23. We were already in a rising rate environment. Now the world's changed a little bit, so you're working through a couple different things. But you mentioned that despite all the noise, a lot of consumers, the majority of consumers, I guess, still have not actually taken advantage of the higher rates on the deposit side.
Yeah, that's the most interesting point. Like, rates are the highest they've been in the last 15 years, even at their decline that you're seeing coming in the last few quarters. And only around 1/5 of the consumers actually know what their interest rate is, and less than 30% are actually earning more than 3%. Sorry, 60% are earning less than 3% interest rates. So you have these amazing interest rates being offered, yet no one is taking advantage of them, which tells us that there's something in the market that's not attracting them. That's not what they're looking for.
Elasticity, just awareness, everything. But and again, maybe we should probably just rewind in terms of your product. The phrase you use is life benefit. It's basically kind of a micro insurance product that actually provides a benefit based on one's deposit holdings?
That's exactly right. We really are out there helping to kind of create a protection story within the deposit network and the experience. And ultimately what we offer is ability for customers and members to earn a 10% on top of their core deposits in the form of a micro life insurance policy that requires no opt-in, no underwriting, and no sign-up. So as long as they're growing those deposits, they're earning that additional benefit. So if something were to happen to them, they know their loved ones are getting their core balance plus a 10% boost.
And I know that when we spoke last time, one of the real appeals to this was everybody was worried about deposit retention. I'm sure they still are, but it was a real hot button right then. The logic being, if you've got this little added boost on this one, if you're going to draw down your deposit, that would probably be the account you wouldn't go to first.
That's right. We were actually seeing today in market the stickiness that life benefit creates, because people we're noticing in market aren't kind of looking at future forward earnings. They're seeing today, and what they're seeing is that they draw down, they see two numbers go down, they see their balance and their life benefit go down, and that is creating them to look other ways to get those deposits needing and keeping that sticky for the institutions.
Now, you had a statistic also, and when we speak about elasticity, about the preference for this benefit, or the, in terms of how they would kind of equate this to a basis point increase in their deposit rate. I think you said it was like 80% would prefer a life benefit?
That's correct. Ultimately, we charge the institution in the form of basis points, and what I can say today is that many customers are willing to give up more basis points than we charge, because they want this control, this benefit, and what we're seeing is on average between 15 and 20 basis points is what they value life benefit at.
I think you said, like 82% would prefer the life benefit
that is exactly
to that
right.
additional piece.
You got it.
And in terms of life insurance itself, I had not heard this before. You mentioned that it's actually in a declining phase as far as an employer-offered benefit.
Yeah, from a group perspective, which is the number one way people can get access to life insurance, because again, from a group and employer perspective, there's no need for underwriting. That has declined by 30% over the last 2 decades, and it continues to decline every single year. And really the only individuals getting access to this are those in managerial roles. Less than 30% of service workers in America have access to this benefit. So where can they go to get forms of protection as they're focusing on becoming financially independent?
So I'm just thinking about the very, very simple math. This is a 10% bump on top of your account, and it pays off when you have a passing of the account holder?
So if the account holder passes away, then that money will be deposited immediately into that account, and then when that account is closed and those dollars are shifted, they're getting the full account value on top versus just the account balance.
So again, $25,000 account, you get a $2,500 addition. Go all the way up to the top of insurance, $250,000, you get a $25,000 addition.
Yeah, one of the things that we're most excited about since last time we spoke was when we originally presented at FinnovBait in 2023, our cap was $10,000.
For the additional payment?
Per account, yes.
So it would be $100,000 of a balance, and you could...
That's right.
Gotcha.
We've now maxed that out at $20,000 because we've learned in the market and we're getting some really good insights and some knowledge, and that's helping us with our partners. So as we gain the experience and understand how the market reacts to this product, we're able to push that envelope further and offering more free life insurance or no fee life insurance. And so in 1 year, we've gone from $10,000 per account to now $20,000.
And to that point, I think you mentioned you've got 40,000 accounts that are currently...
Yeah, we're really excited. We just crossed 40,000 accounts and we're growing. We do expect to be at 100,000 by the end of Q1 based on the contracts and progress that we're onboarding. And it's really exciting for us to see that progress.
That's based on how many institutions?
So we'll probably be live with about 10 institutions by the end of Q1. We're currently live with 4.
And I know one of the more innovative credit unions out there, Michigan State, is on that list of folks that
we're super excited to be our first credit union for them to sign up. They're pushing the envelope, and we're the way they're looking at it is exciting. Having a chance to meet with their Chief Innovation Officer, Ben, he speaks about our product really smartly, which is it's a win-win for both their members and them. It helps ultimately bring peace of mind to their members and ultimately hits their bottom line from a deposit economics perspective as well.
And so they will be the first credit union?
Right now they are scheduled to be our first credit union, correct.
You did get one question yesterday, and I think you had a great answer for it, which I hadn't even thought of, but obviously people are always worrying about kind of scenario planning. If before someone if it's a sudden passing, then this clearly makes sense. If it's a terminal illness or something like that, and people need to draw down their balance over time, they may be disappointed because they actually wind up not getting the benefit based on what their original balance. You said you've got something in the works on that too?
Yeah, in the traditional life insurance space, they call this terminal illness rider, and that's designed to say, if we recognize that you are going to pass away, we're just going to expedite that payment and give you those dollars so you can use them in that case where you're paying your medical bills and trying not to be financially burdened. We're looking at bringing out that same experience, and what we need on our end is just growing underlying experience, but these things exist in the market, and that's the types of things that we're going to introduce as we grow.
That's it. Yeah, and like you say, learning by doing as you get further into the mix. If people want to find out more, what's the best way to get in touch?
Honestly, just visit wish.com, WYSH, and there you can learn a lot about us, and if you want to reach out to us, it's just sales@wish.com.
Alex Machanek, the CEO and founder of Wish. Thanks so much.
Thank you so much.
Something else I learned from talking to Alex, technically, and I think I've misstated this in the past, and I apologize, technically, Wish is a true fintech startup. I was under the impression that they were actually a subsidiary of Northwestern Mutual Insurance. That is not actually true from an organization kind of paper entry standpoint. They actually reside within the org chart. I'm not sure exactly what the technical term would be. It feels almost like a banking as a service model from a regulatory standpoint because they're dealing with insurance, and because Northwestern Mutual is their lead investor, they fall within their organization structure, which just kind of makes things a lot simpler from a standpoint of getting regulatory clearance for what they're doing. A lot of the solutions, and we'll be getting into more of those over the course of the next couple of weeks. We've got 3 more interviews, including the overall winner once we got to the 3 finalists and the pitch-off, a company called Nichols, who, again, we've spoken to before, but has got a brand new product that obviously really caught people's attention. One of the key themes that I think everybody was very interested in is how to expand the credit union mantra to a broader population, more visibility and more new member attraction as well as member retention. That is certainly one of the things that Wish is doing. That was one of the things that Nichols won for. Just saw a new piece of news just before I started recording this. Somebody else we've spoken to in the past, Union Credit and their subsidiary Further as well, just announced they are not only live with 50 credit unions at this point, but they have, through those relationships, have managed to attract 20,000 new credit union members just over the course of the last, I think it's half year or so, since they went live. And key to that as well, 60% of those are under the age of 40, which is another one of those topics that we got into between the great wealth transfer, which comes into play with Ribbon, financial literacy and financial responsibility, all that good stuff. And so I'll post a link to our earlier conversation also with Further you may find interesting. They were not at VentureTech, but kind of breaking news and certainly one of the themes that we spent a lot of time on out in Frisco, Texas. With that, I think we're set for another episode of the Big Cast. I mentioned before that the conference season's coming to an end. I'm actually missing Filene's Big Bright Minds as we speak out in San Diego, but there's only so many hours in a day, so I had to take a pass on that one. Sorry I'm not seeing that. They've always got some great research and insights going on out there as well. Next week, we will be having our annual Thanksgiving episode. If you've been listening to the Big Cast for a while, you may be familiar. Remember our friends John Janklius and Ann Legg joined John Best and I to kind of go over what we're thankful for in the credit union and financial services space over the course of the past year. So you'll be hearing that. And then the week after that, we'll have more content, including 3 more interviews from some of the standouts from the VentureTech main competition, including, as I say, the company that actually took home the hardware, a company called Nichols and Joe Gracia, who we've spoken to before. My name is Glenn Servati. You can find me via my firm, 154 Advisors. We're going to give another push to Blue Sky. We're going to give that another shot. I know last time we went out there, at least I found that it was not terribly active, but it seems like it's based on everything I'm hearing. It's really kind of firing up. So look for us there under the same handles as we've used for Twitter before. I'm at 154 Advisors, Best Innovation Groups at Big FinTech, or our Grand Poobah, John Best, at JB FinTech. We've got new content here, as I started to mention just before, on the Big Cast every Tuesday. You'll find us wherever you get your podcast. You can go out to the Best Innovation Group website, big-fintech.com, or you can find us on Spotify, Amazon Music, Apple, etc., etc. If you like us. Subscribe to us, whatever you do at your podcast place, and hopefully you'll get an alert every time we've got new content, which should be, like I say, on a weekly basis. Always love to hear from you. Drop a note. Take a look at our past episodes on the archive at the website under the Media tab. As I say, plenty more content coming very soon. And as always, we thank you for listening.
Check back each week for the latest from the Big Cast. Or better yet, we hope you'll consider subscribing for free via Spotify, Stitcher, Apple, or wherever you get your podcasts. If you have questions or comments, we'd love to hear from you. Tweet us at Big FinTech. Email info@big-fintech.com or visit us at big-fintech.com and click on the Media tab, where you can post a comment or check out our archive of hundreds of past episodes. See you next week.